Good morning, everyone. You're most welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be taking you guys through the snapshot today. So, for today, we have quite a bit to go through. To start it off, we're just going to have a look through the different assets and see essentially how they're doing as of today. So for today, starting off with indices markets, we are seeing a number of indices are actually in the green, and they are moving up quite steadily. We are seeing Dow Jones at 39,350, Nasdaq currently trading hovering around 20,000, and I think it's getting used to that area. Yesterday we had the Nasdaq CFD, rolling CFD, closing above 20,000. Which was such a good thing because it showed that the tech index is having a lot of bullish signs and could possibly move even higher. So generally in Europe, we are seeing a steady, relatively bullish open, and of course a bullish market. Crossing over to the Forex market, we're also seeing that a number of currency pairs are doing well. If you look at the euro, the pound, AUD USD, NZ USD, USD JPY, most of those ones are actually in the green. Crossing over on the commodities, gold was actually able to break its deadlock over the Asia session today, where we saw it breaking above 2,330, and now is currently trading higher towards 2,350. Crossing over to silver, silver also seems to have had its support flow holding around the areas of $28 an ounce, and it seems to have bounced off that level and is now trading around $30. So again, we've been seeing how silver has been struggling to break below that area for quite some time, and of course we are expecting that if this continues, silver could possibly want to move to higher levels upwards of $33 an ounce and possibly even as high as $35 an ounce. So silver prices rose above 29.6 per ounce on Wednesday, extending its winning streak to a fifth session on expectations of stronger demand for the metal in renewable energy expansion. Silver is a major component for solar panels and renewable energy tools due to its unmatched conductivity and application in photovoltaic cells. So it's saying here that the metal has benefited from a pullback in the dollar and treasury yields, as Federal Reserve Chair Powell has said recent data indicated a shift to a disinflationary trend, although they need more confidence on the inflation outlook before cutting interest rates. So yesterday we had, of course, Jerome Powell and, of course, Christine Lagarde, plus also the governor for the Brazil Central Bank. They were meeting at a conference, and we got some hints from Powell that he's starting to see inflation coming down to the expectation and their longer-term target of 2%. And we are seeing, of course, the markets are responding to that. That is why we are seeing gold buying, we are seeing the indices buying, and we're also seeing some of the risk-on assets also pushing upwards quite steadily. Now, tomorrow we have the UK election, and of course, it would be important for us to see essentially how this election would affect the currency pair. And of course, the main currency pair we would be focusing on is the pound dollar. Now, before I go through this read, maybe the main things to just pass across is that what typically has been affecting the pound dollar in recent times has been whenever there's a change in prime minister. We saw that with Liz Truss. We've also seen that with previous prime ministers. But now, of course, the other thing that's also important and a key issue is that Rishi Sunak, who is the candidate for the Labour Party, is also in the lead for prime minister. And if we see if we see Rishi Sunak winning the election, then it's also likely that the pound is going to have a nice move to the upside, possibly breaking to higher levels. Now, the other thing, of course, is that typically when you go into elections, there tends to be a bit of uncertainty that tends to destabilize the pound. But now that we are seeing that the majority is in favor of a Labour win, then it means that the uncertainty is not really there, and that means that the market will not, it will not reflect that uncertainty. So I think we might not see that much of an impact on a pound. And of course, again, if we see a win from Rishi Sunak, then it's likely that we are going to see the pound reacting to that. Now, let me just read briefly here. It's saying that how could an election impact the pound? Generally speaking, political uncertainty is banned for the pound. Therefore, we could see volatility and weakness in the pound ahead of and during the election, particularly if the gap between the two parties narrows. Okay, so it goes ahead so that said, markets seem ready for an election, and the expected outcome of a Labour victory looking highly likely. Okay, so mark the keyword looking highly likely. The volatility may prove minimal. Okay, so again, like I said, the market responds to uncertainty, and usually in the past, like when we had Liz Truss, of course, and resigning her seat of prime minister, we saw that volatility on the pound, and of course we also saw that some of the policies that Liz Truss had were not favorable for the economy, and we saw that affecting the currency. So I think now the pound is reflecting stability, it's reflecting certainty in a Labour victory by Rishi Sunak. So I think really the impact there is going to be very, very limited. Again, if you read there, it's saying a Bloomberg poll found that 44% of professional investors think that a Labour victory could be the most market-friendly outcome of the election. So I don't think we're going to see that much of an impact on the pound. And if anything, we will see then the pound buying. Now, looking briefly at where the pound is at right now, I can see that it's actually currently hovering close to 1.26932, slightly below its level there of 1.27, and we are possibly looking for a break to the upside. And again, the more we get more hints for a rate cut from the Federal Reserve Chair Jerome Powell, then we will then continue to see some dollar weakness, which will then allow the gold to buy and some of these assets also to buy. So I think that's really it regarding the pound. So we're saying it's likely that the most disruptive result for the pound would be a hung parliament, and this is certainly a possibility. A Labour-led coalition is more likely an outcome than a Conservative-led one, but either result could put pressure on the pound. So again, guys, if we see, if we see possibly some indications that a Conservative-led party could come in with a win, or maybe a majority in parliament, then I'm thinking that could also possibly maybe push the pound a little weaker, but I don't think that's going to materialize. So we should see a steady pound there. So that's really it. Maybe to also speak briefly about the French elections. We had the French elections. We have had the first round of French elections, and we now have the second round going to take place on the 7th of July. I think that's going to be Sunday. So again, what we expect from there is that if we get Macron possibly coming in with a loss from that election, then it's very, very likely that there will be a possible sell on the euro, and also possibly a sell on some of the euro indices. But let's just wait and see how that plays out. Now, this right here is the heat map for the S&P 500, and we are seeing typically what's happening. So we are currently in in a bull market on a number of assets. Gold is in a bull market. These the tech stocks are, most of them actually in strong buys. They are now, most of them are above their 50-day highs, 50-week highs, and they are trading higher. And I'm thinking we are going to continue to see a lot of strength. Now, if you come to this website called FinViz, and you just come to this icon and just click here, the 6-month performance, the 3-month performance, and of course, if you bring it all the way down to a 1-week performance, you see that typically we've been having quite a number of gainers than losers. And of course, this is what is propping up the S&P 500, plus also the Nasdaq. So we can expect to see, higher levels for some of these assets. Now, yesterday, also the comments we got from Jerome Powell also allowed the Nasdaq to test higher levels, and I'm thinking this should possibly continue. Now, the other key thing, especially for those that are trading stocks and also indices, we have some analytics here that are important. Like, for instance, when you come and check on FinViz here, it will tell you that when you get the 4 indices, which is the Dow, the Nasdaq, this is for the US, S&P 500, and the small cap index, which is the Russell 2000, you see that it is it is allocating a 70% bull market. So they are saying that 70% of the market is actually in a bull, okay, and only 30% is in a bear. Now, the other nice statistic here, it's also saying here that 380, okay, components at new highs and only 44% at new lows. Now, the other thing also, it's saying that 61.8% of the stocks are advancing and only 34% are declining. So which means there's quite a lot of bullish, momentum that's, covering most of these assets, and we're likely to see, much higher moves there to the upside. Now, yesterday, the reason why NASDAQ was able to move up to 20K was because of Tesla. If you check on a Tesla stock, you'll be able to see that actually yesterday it was up quite a bit. It closed up about 10.2%, and this is on the back of a good number for deliveries. It fell below the estimate, but it was at least not too low, and I think the market responded with a buy there. So we are most likely going to see Tesla possibly playing out as one of the main components that could push this tech index much higher. Now, going into the economic calendar, let's just look through what we can expect from the economic calendar. So for the economic calendar here, today we have the ADP report. The ADP report is going to be released at about 3:15, if I'm not mistaken, 3:15. And remember, the ADP focuses on private employment, but of course excluding the non-farm. And here we are also now looking to see how the number could come out. So if we get a number above 180K, possibly 200K, then we're going to see that as a bullish sign for the markets. We shall see higher movements, higher for things like, the indices will rally. We could also possibly get a strong dollar, okay? Now, again, guys, I just want to mention this, that when you see the ADP number, it does not in any way reflect the NFP number, okay? There are times where we have very big variances between the ADP number and the NFP number. So the ADP number should be treated very separate from the NFP number, and you only trade it as it is. Do not connect the ADP and the NFP. So trade it as one separate event, trade the NFP as another separate event. Okay. Now, looking at the data here, previous is 152, forecast is 163. If we get a number above 163, possibly that's going to be bullish for the dollar, and of course, even for the indices. The other important data which we have today is this data for the continuing and initial jobless claims. We have jobless claims that's going to be released at 3:30, and of course here we're expecting a potential high number for jobless claims. The jobless claims numbers have been really oscillating around 200K to 240K, and they have not really been, they have been increasing. The number has been, decreasing more than it has been increasing. So if you look at it maybe on an annualized basis, you see that actually jobless claims have been steadily declining, okay? And on every single day, we've not been having that much of an increase in jobless claims, which is a good thing, again, for things like the indices, and of course, even for the dollar. I think that's why maybe the dollar is looking relatively stable. It's showing us, signs of resilience of the US economy, and, and of course, a strong dollar. So that's why we are seeing a strong dollar, even when the other currency pairs are also gaining a bit. Now, we also have the PMI. The PMI is going to be coming out at 4:15. This is the S&P Global Services PMI. These PMIs don't tend to move the markets that much. We have the services PMIs also coming out at 5 p.m. Again, might or might not really move the market as such. Now, you can just have a look at crude oil. So crude oil currently is trading about $82 a barrel. That's US oil. And we have been seeing that actually the US oil has been trading steadily higher on the back of demand. I suspect that's the reason why it's trading higher. I haven't really been keeping an eye too much on the oil market. Maybe Rufus, if you can comment and tell us possibly how where oil could possibly go to. I think Rufus will be with you guys tomorrow to give you some hints on that. And maybe the other thing that's also important today is the FOMC meeting minutes. The FOMC meeting minutes are going to be released today at 9 p.m. And I'm expecting that there's likely going to be, some bit of an impact from those FOMC meeting minutes. Likely, maybe some indications on what the FOMC members think of the economy, and of course some pointers on where we expect them to go with regards to policy. But I don't think we're going to get that much of a move. Possibly even a move higher could come out of that. We just have to keep an eye there and see what happens. Yeah, so I think that's really it. I just want to go through two things on TradingView before we can cross over to the MT5. Awesome. All right, so now on TradingView, I just want us to have a look at the DXY. So we're going to go on the daily, and on the daily, we're just going to have a look at the DXY to see where the DXY is trading at the moment. So now, as of today, the DXY is a bit bearish. Okay, we are seeing it selling a bit. I suspect also that's why we are seeing gold, moving quite aggressively to the upside. We are seeing a steady move higher on gold. We're also seeing a steady move, a steady move there for the DXY. So now this here seems to be this was our first top, okay, right here. Then we had our second top, and now this is the current top we have so far. Okay, so if you look at the DXY on the weekly. If you look at the DXY on the weekly, this is how the DXY has been, okay? So we are going to go in an organized manner. When you start from this way here, January 22, okay, was when the Federal Reserve started its rate hike cycle, okay? The rate hike cycle which the Federal Reserve began in 2022 was the first that they did in a long time, okay? And it was at this point that we saw the DXY launching a rally that took it, it launched a rally. This rally was 11-month rally, okay? A 10-month rally all the way up to October. Now, this is where it peaked from, okay? Now, after peaking here, we saw that it actually now started declining, okay? So this decline was when we saw that actually inflation was coming down a bit and inflation got tamed. So by July 2023 is when we saw inflation, reaching its peak levels. And I think that's when we saw that the DXY started to tap out. Now, in December 2023, this is when the Federal Reserve communicated that the rate hike cycle, which they had begun in January 22, was likely to come to an end, okay? And that is when the bull market began. So if you guys are trying to find when did the bull market begin for stocks, this is when it began. Because if you go into your charts, you will see that when we had a break for the Dow above its previous all-time high, it happened in December. Nasdaq's all-time high happened a little later, but it happened close to December. I think it must have been around Feb. I don't know. We'll have to check the charts and see. But that is when the bull market began. Now, Bitcoin also entered its bull market around January, okay? It's not too common that the one of the biggest central banks in the world, which is the Federal Reserve, will announce new policy measures. So the last one was in 2022. The one after that was now in December 2023, okay? So much as we've been seeing a steady move higher on the DXY might not really break to higher levels, okay? And the reason for that is simply because the policy that the Federal Reserve is going to take soon is going to be one of rate cuts, which will then weaken the dollar, okay? But of course, the upside momentum we are seeing has been simply because when we entered the start of the year, the Federal Reserve excited us too much that we thought the rate hikes were going to begin as soon as January, but that didn't materialize, okay? Because now as we speak, we are only seeing the recent dot plot from the FOMC members is only showing one rate cut, which is going to happen in December. So all that benefited the DXY, and we saw it steadily rising, but it has been rising alongside the stocks, okay? Because the stocks are already factoring in the rate cuts. Amongst, of course, other fundamental factors, we're also seeing that they're factoring in the rate cuts. Now, looking at where the DXY is at the moment, I think the highest level we could possibly get to is going to be a revisit of our April highs, which is somewhere around here, okay? And then we could start seeing it steadily declining. Now, I know that we have the ADP report today. So this ADP report is really, really going to have to help the dollar. If we do not get that much stronger report, I don't think that dollar is going to buy too much. So we should continue to see a strong gold. We should then see a strong gold. Possibly Bitcoin should also recover a bit, strong euro, and of course then we should then also see a strong silver. Okay, so these are the levels to watch on a DXY. Can we be able to take out the May level? Possibly even also take out this level that we had for June. If we do not take these levels out, then I think then the DXY is going to top and start its downtrend. Now, the other thing that's also important is we know that we are now in an election year. So I need to make that very clear for some of us who might not be aware. We're in an election year now for the US, not for Kenya, not for Uganda, but for the US, okay? So the US is going to be voting for their president sometime this year. Now, again, if you check the last time we had the election, we saw that the DXY typically does not perform too well during election years. We saw that by the time the elections happened, the DXY had already secured a downtrend, and that downtrend only intensified up to the downside. Now, I know that within this same year, we also had a lot of rate cuts to boost the economy, because this is when we had COVID. I know COVID brings a lot of mixed memories to some of us, but this is also when we had COVID. So it could be on one hand that maybe they cut the rates too much and that weakened the dollar, but also it could be that during election years, we tend to see a weaker DXY. So right now we are in July, and so if you look July to November, I think we are likely to see a weaker dollar, which would then spell more strength. Therefore, things like the DXY, and rather for gold and possibly even some other assets. Now, guys, before I move over to MT5, I just want to quickly look at gold. So when you cross over to the gold chart, we're going to look at gold on the H4 time frame. Okay, I'm just going to remove these limit orders. I used these yesterday during class. Now, the gold chart is showing you that we are now in a bullish market. First of all, we crossed a four-year resistance level, 2022, 2021, 2020, 2021, 2022, 2023. We crossed that resistance, four-year resistance, and now we are up here. Okay, so gold seems to be stuck in a range. Then actually seem to be stuck in a range. It's actually in a range. Okay, that now seems to have broken to the upside, and it seems like it wants to now come and retest this level of 2,368. Okay, let me just zoom that in so that it's clear for you. Okay, so this is currently what gold is looking like. So on one hand, it's easy to think that maybe gold has created a support flow, because we've been testing this demand zone for quite some time now. We tapped in it around 2nd of May, bought out of it, went back in 6th of June, bought out of it, came back here just last week, bought out of it. Okay, so it's easy for someone to say maybe this is a demand zone for gold, right? And that for us to look for any sales, we need to see gold selling below this area to open up levels to the downside. Now, keep in mind that the retail demand and the institutional demand for gold is very, very strong right now, and we could potentially see more strength there, possibly to the upside. Okay, so in this week, the key level for you to watch for gold is going to be this area that we saw around the 21st of June. We need to see whether gold possibly moves to this level. And of course, if you cross down to the H4 time frame, the main barrier that gold has is within here. Okay, is within here. We have this area of 2,368, which is the barrier for now. We take out that level there, more buyers are going to come in and then, of course, take us here. So the buyers, the demand that we have now is only on the back of a weaker dollar. If it's not strong enough, then we could possibly reverse and trade lower. But for now, you might want to have some buy stops slightly above, so that in case gold breaks up here, you might be wanting to target that level above here. Now, that's what I have for gold, guys. I'm now going to cross over to the MT5 so that we look at other assets and see how they are trading. Okay, so let's start with the Euro USD. So for Euro USD, this is what we have at the moment. We are having a steady move higher on the Euro USD. Okay, and of course, this move is off our confluence support that we had drawn last week on Friday. If you guys, you can just kindly maybe watch the Friday snapshot again. So the Friday snapshot, you say the confluence support for the Euro USD is along that level. I don't know if that number is visible, but that was the level that we marked for buys, okay? Because we've been having a lot of retests along that level, a lot of liquidity sweeps, and of course, we have some fake outs, sell fake outs that switch to the upside. Now, at the moment, first of all, we came back down, closed that gap that we had from the French elections, and now Euro USD is buying up. Now, if I'm going to go to some buys, I might want to target that 50% Fibonacci retracement level on my H4 time frame. I know this is a bit of a tricky call for Euro USD to head to, but if we get a lower ADP number today, without a doubt, Euro USD can test higher levels. Now, on one hand, we have a situation where we see Euro USD, of course, currently trading lower. Technically, of course, we also have a death cross here on the H4 time frame that really is not giving us that much confidence of a buy. When you have a death cross, it's usually not advised to look for buys, okay? But a death cross is there, and we need to see whether we can sustain price action, especially to the upside, above this 200-day moving average. If we break above it and stay above it, then the next level for us to target is going to be that level of 1.08029. Now, the sellers are going to have to kick in here. This is where the sell side liquidity is. If we get any selling, it has to be at this level, okay? As long as we stay above this level, I don't think Euro USD is going to sell. Now, let me come to fundamentals. There's some bit of political uncertainty, especially around the French elections. If we get to see more, rather a likelihood that Marine Le Pen comes in with a win, then I think it's likely that we should then see a potential move to the upside for the euro. But most importantly, if we do not see any uncertainty around the election, then I think we are going to see the euro trading higher, possibly to this level here. Okay. Now crossing over to GBP/USD. GBP/USD is currently forming a nice steady move higher. We had a very nice sweep to the downside along our level that we marked here. And of course, we are seeing that GBP/USD is currently holding support along this area here. The other thing, of course, that I have to mention on GBP/USD is that if we see a win from Rishi Sunak, then I think that is going to sustain a move higher for GBP/USD. We have a lot of imbalance candles and, of course, a lot of liquidity sweeps along this level, showing us that GU or GBP/USD is currently holding support, and we could then see a push to the upside towards this area here, where I've marked my box there above that level for the buy side. Now, the other thing I also need to mention for Euro GBP/USD is that we are currently in a bullish structure, so it did not really surprise me that price seems to have held support here and went into a buy. Yes, we have a death cross on the H4 time frame, but again, we are not seeing that much confidence in sell, especially knowing how weak the DXY is. If this afternoon's data for ADP comes in weaker, then I'm thinking we are likely to see a much stronger move to the upside. possibly towards that level of 1.27. So let's cross over to, I think I'm through with gold, so I'm not going to go back to gold. I can maybe go to the NASDAQ. Now, the NASDAQ is in a very, very, very strong momentum move to the upside, okay? And I think this one, without a doubt, really, it cannot be fought, okay? I think it cannot be fought. The best way for you really to be part of this is really just to get into buys, guys, okay? We had a very nice setup on Friday for a descending channel. Again, you can see how the price action kept, moving along that 50-day moving average, showing us that there's a bit of hesitation to buy. We're far, far, far above our 200-day moving average, which again, if price action were to cross it, would be a sell trend. I think a lot of the components that were providing upside momentum for the NASDAQ were components like NVIDIA and Apple. But now you have a new contender, which is Tesla. Tesla is not anywhere close its 52-week highs. If Tesla launches an upside momentum move, then we are going to see the NASDAQ starting to move higher. Yesterday, we saw how Tesla was able to hold up the NASDAQ single-handedly, even when the other components are not doing too well. Tesla was up only 9%, but it was able to sustain a move for the NASDAQ, and we saw it moving higher. Now, I'm expecting that if we take out our previous resistance level, which is around there, then I'm thinking the NASDAQ is going to invite buyers that would take it upwards to 20,200. And of course, the barrier for now is along that level there. I don't know if it's too visible. Maybe let me zoom in a bit. The barrier right now is along that level, okay? We need to see whether we manage to take out that level, okay? If we do, then we should see the NASDAQ trading higher and, moving all the way to the upside. The other possibility for today is that we're going to see a liquidity sweep that could form above that high for the NASDAQ to then have, a drawn liquidity, maybe something like this. And then we have a liquidity sweep before we see it reversing, possibly to trade lower. That's another possibility. Now, I also know that we have NFP later this week. So the NFP is going to play a big part on where we see the NASDAQ trading. Now, crossing over to US 30, US 30 has been stuck in a very, very tight range, as you guys can see. We only recently broke out of that channel, somewhere around here, and we saw it trading higher. The US 30 is one of the good indices to get into now because the discount zones that it has are quite big. We could see it trading as high as 40,000 within a matter of weeks, okay? If the bullish momentum stays, then this level here would be a very, very good swing level. And of course, going into today, I think we are going to see US 30 aiming for that level of 39,600, somewhere around here. So that sums up the analysis for today. If you have any questions, now might be the time for you to ask your questions so that we can go through the questions, guys. So just send in your questions and let's see what you guys have to ask. Michael Anthony is saying, is this trading in the USA? I don't understand. Maybe just kind of try and clarify your question there. I'm lost on what you're asking. Hi, Apollo. How are you doing? Apollo, it's been a minute. I hope you're doing awesome. I hope you're having a great time. Morning, Rufus. Thank you for being on with us, Rufus. Rufus, I need you maybe to tell us a bit about the oil market. Maybe you'll talk a bit about it tomorrow. Yeah, Apollo, you're saying looks like the Labour Party is most likely to carry the day. How different? Apollo, you're saying looks like the Labour Party is most likely to carry the day. How different are they to the Tories policy-wise? that would affect the pound. Recall Liz Truss sank the pound aggressively. Yes, that's true. Apollo, we saw actually during the time when we had Liz Truss, we actually saw a relatively weak pound. That was because some of the policies that Liz Truss had were not favorable for the pound. I can't really say I remember exactly what in her policy was not favorable for the pound, but I can say price action wise, the pound suffered a lot of sell momentum around that time that Liz Truss was in power, and I think we are now experiencing that with Rishi Sunak currently as Prime Minister, we are seeing, the pound reflecting a lot of strength because of some of the things that he has done, some of the things that he's implemented, especially to bring the economy back on its foot. Around the time when Liz Truss was Prime Minister, we saw that the UK had very, very high inflation, close to double-digit inflation. We also saw that there was a lot of really uncertainty on a lot of the things. She also had a lot of tax. She was taxing the UK quite a lot, and her tax regime was not the best. So it was stifling the economic progress. And I think now we should then see, some bit of move higher there from Rishi Sunak. And I don't think the impact is going to be much. Apple, you're saying tomorrow is UK elections. How comes it's not a major thing like the US elections? US elections determines a lot, Apple. I think of course, first of all, it's I think it's the biggest economy in the world. Okay, it's again we have the reserve currency, the trade currency for the world is the dollar. So a lot of things, and of course, political uncertainty around that is one of the things that really brings the US elections as a much bigger political event than the UK elections. Yeah. Awesome. Next question. Nancy, you're saying, how do we trade DE30 and DE40 and France 40? So for the indices, we have a video which is going to be put out soon on that. But typically how you're supposed to be approaching the indices is that you're supposed to be focusing on the order flow. So you focus on the stocks, the individual stocks and how those stocks are doing. Typically, you'll always find a bullish market whenever you have the components of in that index having bullish momentum, and you'll always have a bearish market whenever you have components within that index, being bearish. Okay, so that is typically how you're supposed to approach trading indices, as well as also the technicals. Yeah, it's not any different from the other assets that are traded. Okay. Smile, you're saying gold will buy today. So again, with gold, what you mentioned with gold, if I'm to go back to the charts, gold has broken out of a nice channel there. We saw it hovering within this area. Since Monday, gold was stuck in a deadlock, okay? It was trading below 2,334, again, trading above 2,320. It's only today morning during Asia session that we saw it breaking higher and now moving higher and higher. So I think the next level for gold to test is going to be 2,368. You might want to trail your stops. Trailing your stops is where, for instance, if you're buying gold, you set maybe your stop, you trail your stop maybe 20 pips behind or 30 pips behind in case of a retracement. Okay. The other thing also could be that if you've missed gold's breakout today morning, you might want to wait for a new session, possibly maybe New York session, to see how it performs later. But again, looking at where the next levels it could go to, we have taken out all these points here. So the next area for it is this area up here, which is 2,368. So I hope that helps, Smile. I think we might see another all-time high for UT100 draw. Yes, Joseph, I think the all-time high is going to depend on the components, okay? Yesterday, what pushed NASDAQ above 20,000 was the performance of Tesla. Tesla was a very big gainer yesterday. We saw it actually pushing NASDAQ above 20,000, and now it also had its first close of 20,000 yesterday, okay? That's when we had the first close of NASDAQ above 20,000. So that was remarkable. and it also showed us that we could see potential moves higher for it. So I think we might see a liquidity sweep candle today, possibly Nasdaq moving as high as 20,140 before it moves lower. The other critical thing or issue about Nasdaq that's very, very important, Joseph, is that we know that Nvidia and Apple were the major stocks that were pushing Nasdaq higher. Now they seem to have paused a bit in upside. So Tesla is now the stock that is affecting Nasdaq's momentum. If Tesla continues moving higher, of which Tesla is currently below its 52-week high, so which means it still has more upside momentum. If Tesla posts between 5 to 9% gains on a daily basis, I think that is going to push the Nasdaq upwards, 2,200, possibly even 2030, 2,300. Yeah. So I hope that helps, Joseph. Apollo, you're saying, please explain briefly what you mean by order flow. Order flow, I'm talking about the demand and supply. The stocks move by demand and supply. Okay, so you need to focus on the demand. If demand is pushing them on that day, we should be buying and not selling. And if supply is pushing it on that day, then you should be selling and not buying. So, for instance, if I scan the indices today, most of them are in the green. I'm talking about the US stocks. I'm talking about the ones for Germany, the ones for France. A lot of them are in the green. So which means today the order flow is indicating signs of demand, which is again propping them higher. Okay, so I hope that helps. Awesome. I think that's it. Do you have any other questions? Okay. All right, awesome. Guys, thank you so much for joining me for the market snapshot. I wish you all the best for today's trading. Yeah, I think that's it. Make sure to subscribe if you're not yet subscribed to that YouTube channel. If you're new here, if you're a beginner, you can open up a demo account with FX Pesa. The link should be in the bio. For that. Then again, if you want a live trading account, you can still be able to open up a live trading account using the link in the bio. Awesome. Cheers, guys. Happy trading, and we talk soon.